Hi, my name is Darren Joseph from HTJ.tax. We're the team that seeks to demystify this sometimes confusing world of international tax and the privilege of having a deep conversation with Mark. Mark, can you please introduce yourself?
I'm Mark Morris. I'm based in Switzerland. I've been here for about 26 years. I've specialized in automatic exchange of information, which originally was the EU Commission's EU Savings Tax Directive. And that went on until about 2014, and they scrapped that and they adopted the OECD's FATCA made into CRS.
So can you share with us what it is you do professionally?
Primarily, I provide custodial services for trusts to hold underlying entities or partnerships or unincorporated funds. So what I do is I provide the administration services for the custodial. I don't do the actual custody. And later on, I'll explain what administration services for custodial is. And I'm an expert in CRS and CARF, and I certainly know the intricate differences between CARF and CRS. We'll get into that in a later question, okay? I've published over 600 articles on LinkedIn, and I'm still writing about 10 a week. And I don't see other people covering 99% of the topics on CRS that I cover.
Okay, thank you.
Passive NFEs and active NFEs. What is the difference between the two, and why is that of importance?
So when they introduced automatic exchange of information, they didn't want to flood the system with companies that are active, such as restaurants and hotels and manufacturers and plants. And so they really only wanted to go after the companies that are earning income from investment. So if you're active in business, then that's an active NFE, and then there's no reporting. Even though you can embed investments within that, if you keep it to less than half the activity, then that's still active, which is a loophole, and it's a common loophole. People using active, like the Greek shippers, they've got large ships and so on, and earning, but then they invest the money within that active NFE. Those were the first types of companies that were identified in the EU Savings Tax Directive, that people are using, they earn their profits in the active, and then they invest it. Whereas passive, it comes from the term passive income, which is really income that you're earning by just sitting back and letting your investments do that. So that's capital gains and interest and taking profits and trading, etc.
Okay, so are you saying, to generally speaking, the extent to which an organization can be classified as an active NFE is perhaps the extent to which it could avoid being subject to information sharing?
Yeah, I think one or two of the questions that we'll touch on is the ways people convert their passive NFE into an active NFE. So we'll touch on, I think, at least two questions. I want to say, I sent you originally a few weeks ago the list of 90 ambiguities and unclear clauses, but for the purpose of this interview, we're only looking at less than 2 dozen. Otherwise, we'll be hold it. And maybe in the future, we do another 20.
That's a lot of fun to be had.